The UK property market is always changing, and if you believe the headlines, you'd think the world is coming to an end. You have to bear in mind, a lot of media is sensationalized to get you to buy the newspaper, to get you to watch it. If you watch the thing going, there are some changes coming into play, but you don't really need to worry about it. It's been well thought out and designed, and there's going to be a minimal impact on landlords. You wouldn't go, ooh, I'm going to stop my day and give that a read, would you? Whereas Ed Miliband says landlords have to achieve XYZ by this day or they will never be a landlord again. Oh my God. See the comments posting on Facebook. And by the way, that's not what he said. What he said was, as a government, we need to support both landlords and tenants to achieve this by this day so that we can have great landlords whilst also looking after the environment. Quite a bit different, isn't it? When you actually watch what he really said rather than the snapshot. But you see this all the time. Interest rates at a 20-year high. It's like, yeah, because it's been fucking 0 point fuck all for since 2008. Of course it's an all-time high since then. You know, all of these things, it really gets to me, as you can probably tell. But it's like, I always say, if in doubt, zoom out. And also follow the big players. So who's buying loads of properties? Have a look at the World Economic Forum, by the way. But if you look at them, who's buying the stuff? Legal & General, Lloyds Bank, Lohman Group, Aviva, all of these massive players making big moves. So sometimes the news is a little bit scary. The reality is very different. So if we look at media versus reality, so the scaremongering, interest rates at an all-time high, market could crash in response. It's like, nope, the reality is it's going to stabilize the market, which was growing way too quickly. And actually, because of the higher interest rates, there's going to be more renters. So you're probably going to see rents going up significantly. And what happened? What I said rather than what they said. House prices have come down 5%. We could see a massive crash in the market. Is this the worst time to invest in property? Reality is there's been a correction post-COVID where money was pumped in and we had a shutdown for 3 months, so artificial inflation. So again, a natural correction in the market. When would you ever moan if you are a genuine long-term investor are getting a 5% temporary discount? The reality is great opportunities for us to seize. Rents are out of control, tenants won't be able to pay. Reality is rents have gone up, but there is some regulation around it, with more regulation coming in, and unfortunately that is supply and demand. The reality is every free market which we live in works on supply and demand, and if there's an affordability cap, then what has to happen is we wouldn't be able to increase it any further. But the reality is money goes up significantly every year in line with inflation, pay rises, and it has never, ever, ever, ever happened in any market since buy-to-lets have become official where there's been an affordability crisis showing in the stats. It's only ever showed in public opinion, which is the media's opinion. So now we've got rid of that rubbish, what actually matters? Well, first of all, fundamentals, supply and demand. We have over a 1 million property housing shortage, and that is meaning 1 million people want to find a home and it doesn't exist. And love it or hate it, immigration is huge right now in the UK. And what I mean is if you look at the stats, and I'm not sharing an opinion on this, by the way, if you look at the stats of how many immigrants have come in the last year versus the 10 years before, which of course brings a lot of pros and cons, the one thing you cannot argue is the sheer amount of pressure on them. And unless the government is going to suddenly allow those millions of people to sleep on the street, which it will never do, obviously. What does that mean? There is far too much demand, in my opinion, for the supply. We just can't keep up for it. It's a real housing crisis. But from an investment point of view, when 10 people for every one house wants to rent or buy it, what happens to prices? I'm not going to insult your intelligence. I think you know what happens. Next is house price trends. So this is actually more micro than you think. So you might hear blanket statements like the average property doubles every 10 to 15 years. It's like, yes, that is true as an average. Well, it is true as an average. But actually, there are some that do way better than that. And there are some that over a 10-year period are just about there are some areas that are just about catching up on 2008 prices. And so it's not as simple as that. You need to have location trends. It's obviously not every area. And so you need to make sure that it's trending upwards in your area. To put simply, where do people want to live? I don't think we need to overcomplicate this, okay? But you need to make sure you're focusing on high growth areas. Where are companies moving to? Where are the jobs at? And then think about the impact outside of that. So a great one is one of the strongest growth rates in jobs is Leeds. That doesn't mean I'm going to buy everything in Leeds city centre. It goes, what areas around that are the best impacted? And it's weird because if you go outside of Leeds, there are some that aren't that positively impacted by it and many that are. And it's based on the bus routes and the trains, okay? Who can live here outside of a city centre but getting easy to get to work? Interest rates. So interest rates are starting to come down. They are not a bad thing, by the way. Neither are they particularly high. People going, oh my God, interest rates are so high. No, they are actually below the long-term average. The long-term average is just over 6%, just so you know. And they are already below that. We recently had it drop by 0.25%. And it's very likely to come down further this year. But what it is it's in line with inflation. We're not going to go through the economics, but it's very much a financial approach to reducing inflation and spend in the UK, and it seems to work fairly effectively. And so really all we need to do is factor it into the analyzer, and that is it. It baffles me how emotional people get around interest rates, like it's this big shock. All we need to do is factor it into the figures and make sure you're cash flow positive. Government regulations is the other thing that we constantly need to measure. This is tax for landlords, business owners, EPC regulations, and of course renters reform and tenant bill rights. So all of those things, they are just change in the market. Now, I mentioned earlier, if in doubt, zoom out. And this is the thing that baffles me. I love it when something comes in, genuinely. When something comes in like, Ed Miliband has said this, I'm like, great. Do you know why? Because I know I've probably got a 3 or 4 week window to buy properties and get offers accepted. Not so much on getting a great price. I focus on value rather than price. And I get access to properties that I couldn't get access to genuinely before that article. You would be shocked how like a stamp duty increase, the renters reform, an EPC change, Ed Miliband making a statement, suddenly people get emotional around it. It baffles me. The reason I say, if in doubt, zoom out. Do you think if you buy a great property in a great area at a fair price and you get a great tenant, do you think in 10 years the property price is going up or down? Well, I can say this to you. There's never been a 10-year period ever in history, ever, where property prices have gone down. So if the fundamentals are on your side, who gives a shit about these small headlines or blips in the radar? It makes no difference. I'm going to stop there before I get too ranty. But genuinely, if in doubt, zoom out, focus on the fundamentals. So what's the right approach in today's market? Well, first of all, we focus on growth, but make sure the cash flow is covering your ass. And what I mean by that is you're not quitting your job from buy-to-let properties, despite what the educators out there will tell you. You're not looking to quit your job. You're looking to improve your legacy, maybe what your kids inherit, but ultimately your net wealth. You will sooner become a net wealth millionaire through property rather than quitting your job, I can near guarantee you. What does this reflect as? Well, in my areas, I'm looking for a 7% yield, and that is achievable. It's hard, but it's achievable in my areas. Your area might be slightly different, but 7% yield is a really nice target because it makes sure it gets enough cash flow to pay you a little bit and pay for any incidents that happen. But also a 7% yield in my area usually will mean it's in that nice Vine Street area, using the Monopoly reference, where it's going to get really strong capital growth. How do we look for capital growth? Well, it's going to be in high demand areas. So yes, I'm going to look for inflated growth, such as the South Bank development, where it's 350 football pitches, that's hospitals, developments, 8,000 jobs, all of that sort of thing. But I'm looking for the fundamentals, okay? I'm looking for past giving an indication of the future. So in my areas, I'm really looking for properties that have had 5% per year growth as standard. Now, there's going to be certain years where it's gone up a lot more than that, and of course where there's been retraction in that, so where it's come down as well. That's fine. I'm just looking for long-term averages of around that, and it doesn't guarantee the future, but it's a bloody good indicator, and I want to understand that it's happening because of basic fundamentals. Tip on that, by the way, I heard the other day somebody going, an investor wants to invest in this area because they're putting a new train in it, and it's like, That's not fundamentals. Like anything where you're looking to invest just because a new train line is going in, that could mean it's great. That doesn't mean it's great. And I won't mention the location in case if anyone gets upset. But I was voice noting a mentee on this. I was like if you, because it was a high-speed train, so it lowers it down for you, right? And the idea is it's going to add loads of value because now people can get in and out of London a lot better. It's like the only way that actually impacts on the value of that area is because people that work in London, in theory, don't need to live in London. They can move in that area. And this is an area where if you lived in London but you wanted to live out of it, why would you pick there? Like, you just wouldn't do it. And so it actually has no economic output whatsoever. The improvement and increase in jobs is absolutely minimal. And so people make really weird assumptions without the economics to back it up. So negotiate good deals. And I just really want to be clear on this. I'm not talking about discounted property and below market value. I mean getting a fair deal. Warren Buffett is like an absolute hero of investing. And I'm telling you, the more you're in property, it's the same merit. Back in the day, he would say, I want to buy a fair property at a great price, i.e. get a discount. Whereas now I'm looking to buy a great business at a fair price. And it is exactly the same in property. Back in the day, I used to focus on getting discounts, and it's so stupid. It's so stupid because you save 5 grand, 10 grand even. You're like, brilliant, amazing deal. It's like, yeah, but you can't polish a turd. It's still a shit property in a shit area. Whereas I would rather pay a good price, a fair price, market value, maybe a little drink off, rather than paying over market value for a great property. Now, the thing that you need to understand when you're looking for a great property in a great area is the competition. So the likeliness of it going above what I actually perceive as the market value is incredibly high. So we're not looking to get cheeky discounts. We're trying to negotiate great deals. Very different. Finally, work with experts. And this is going to be at different levels. So it could be you want to be a really hands-on investor, but you're going to find your own refurb team. You're going to find your own solicitor, your own broker, your own management agent, which is amazing. And I strongly recommend you going to the area that you're investing in. Some of you, a lot of you won't live there, right? Go to the area for a few weeks, build those relationships. Alternatively, you can use somebody that already has those relationships. But either way, you need to make sure you are getting the experts in that. I promise you, price is what you pay, value is what you get. The amount of people that try to get a cheap broker, a cheap solicitor, and they're worth every penny because they screw everything up. And the amount of investors that I work with that have said initially, I want to use my own solicitor, and they've lost deals before because of it and lost tens of thousands of pounds, is just not worth it. So find the experts and remember, price is what you pay, value is what you get. Final thing that I really want to say is time. So time in the market will always be timing the market. And the amount of people that I've spoken to that think they're going to time it and they're absolutely wrong. So for example, when the market's going up really aggressively, they'll go, ooh, prices seem to be going a bit fast right now. I'll probably wait for them to settle down. And when the market's more stagnant, so they've got a little bit of growth, they go, oh, it's not really going anywhere right now. I just want to see what the market's doing. And then when the market's going down, then they can actually get discounts. And we are so far from that economy, it's unreal, by the way. But when the market's going down and we can snap up some really good deals, they go, oh, the market's falling. I don't want to catch a falling knife. I'll wait for it to bounce back. And so you don't wait to buy property, you buy property and wait. Like genuinely, there's so much analysis across this. I'm not even going to go into it. Maybe we could find a video to put up for you at some point. But the reality is, buy property. Now is always the best time to invest in property. A great deal is a great deal. And remember, especially with boring vanilla buy-to-lets, you're not buying it to sell within the next couple of years. That would be really stupid, and I advise you don't buy them. You're buying something to reflect on 10 years from now, 20 years from now. And let me ask you this, if you could invest today or 10 years ago, when do you think you would say? I guarantee if you've got any idea or knowledge about it, you'd say 10 years ago. And the reality is, if I went back last year, the year before, the year before, the year before, and I asked you that question, you'd answer the exact same time, because there has never been a 10-year period where property prices have gone down. So stop just watching videos and informing yourself. That's not going to get you the results. If you're ready to take action, take the action. Even if that's on your own, great. Take the action, take the plunge, invest in yourself, invest in property and get your returns. And if you need support doing that, great, we can help you. On the other side of it, you can work with somebody like Aspire. So Aspire Portfolio, what we do is we build portfolios hands-free for people. So if you're in that category where you're going, I've got 100K to invest and you want to scale a portfolio without your time invested, you don't need the knowledge and you won't screw up, because we've done 1,000 of these, we do about 200 a year, and you want to be a part of that journey, link in the description, fill in your details and book in a one-to-one strategy session with me or my team, and we'll get a deep understanding of where you're at, what funds you've got available, and what you actually want to achieve with it. If we can help you, we'll talk about what that looks like and how we can do that. And if it's not for you, then you just get some strategic advice and get a load of value. So the link is there. Fill it in now. If you struggle with the link, put portfolio in the comments. My team will get it across to you and we'll get you booked in. It's completely free, no pressure whatsoever. Book it in. Let's have a chat. But don't wait. Take action. I hope this has been valuable for you. If it has, make sure to hit the like button. It really reflects for me and the team that people are getting value. And I think it also tells the algorithm to show it to more people like you. So that would be really helpful if you did. If you're new to the channel and you haven't yet subscribed, only 50% of people that watch the video are actual subscribers. If you're not one of them, no, I'm joking. But seriously, become one of the subscribers. Get notified by hitting the subscribe and the notification bell. I want to add as much value as I can. And I'll see you in the next video.